Learning Objective 13-2. Understand and be able to calculate threshold tests for segment reporting. And first of all, let me preface this by saying that the thresholds here are very different from other thresholds that you've seen in accounting. In financial accounting, at least in the US, we have a lot of what we call bright line rules or thresholds. And these are not bright line at all. It's pretty much up to the judgment of the company how they want to establish if something is a segment. These rules are kind of recommended, and if a company doesn't meet all of them for a specific segment, it still has the ability to use its judgment to establish that a segment should be reported separately. It shouldn't go overboard with this, but there is a lot of flexibility in how you're going to apply these rules. You must, if you have more than one segment, then you must report separate supplemental disclosures. I'm going to go into what a lot of them are in a little while. And how do we determine if a segment needs to be separately reported? And the FASB created three 10% rules and then an overall threshold that I'll go into. So there's basically three separate 10% rules: 10% of revenue, 10% of profit or loss, and 10% of assets. And how we apply profit or loss is pretty weird because profit could be positive or it could be negative, so 10%, how are you going to do that, right? So let's go over how you're going to do these. And there's a few quirks to these rules that you should be aware of. So let's talk about the 10% rule for revenue. If an operating segment's revenue, including both external sales and inter-segment sales or transfers, is 10% or more total revenues from external sales plus inter-segment transactions of all operating segments, then the segment is separately reportable and it's a segment, basically. So the line here, how they deal with external sales and with inter-segment sales is a little bit weird. Because what they're saying is normally we've talked about this in a previous chapter, we would eliminate those in consolidation because we said they're not sales. For purposes of the 10% revenue test, you would add together all of the revenues of all the segments, including inter-segment sales, in order to do this calculation. And the total sales, that would be the denominator in determining 10%, is also going to include all the inter-segment sales. So that means that certain sales could be included twice, because if segment A sells to segment B, which then sells to a customer, you had two sales, and they're both going to be included in this computation. So let's consider this division here. We have food products, plastic, packaging, consumer, commercial, health, scientific, chemicals. 5 segments, right? And this is the segment revenue. And again, it should be noted that the segment revenue includes inter-segment sales. So basically, you would allocate this 600,000 total between the 5 things. So you go, say, 323 divided by 600 is 53.8, 113 divided by 600 is 18.8, so on and so forth. And every time that this percentage is greater than 10%, you have a reportable segment. So in this case, food products, plastic packaging, and health and scientific are all considered to be reportable. Consumer, commercial, and chemicals is not. And we are in Excel. I could not help myself. Honestly, I just didn't like the PowerPoint here, so I figured I would give you an example in Excel just to show you how this is done. So what you're going to do is you're going to sum up the profits and you're going to sum up the losses. And you're going to use whichever is larger, which in this as your denominator. So that's going to be 279. Then you're going to come up with your percentage. So your food products would be 198 divided by 279. Your Your plastic and packaging would be $59,000 divided by 279. Your consumer and scientific would be the $25,000 loss divided by 279. You're going to use whichever of these, profit or loss, is greater. Health and scientific would be 22,000 divided by 279. And chemicals would be 9,000 divided by 279. So then you use whichever ones are greater than 10% are going to meet this test, and therefore you have segments separately reportable. Food products, plastic and packaging, but the remainder here is going to all be not separately reportable. And that's how you're going to do it. So because these are less than 10, because the absolute value of these is less than 10%, then they're not considered to be separately reportable. So now let's talk about the 10% asset test. I don't know why that's not in the PowerPoints, but here it is. So if segment assets are 10% or more of the total assets, then it's going to be separately reportable. And the way to understand this term of separately reportable, just for a clarification, is that you have your segments, and then you have to determine which ones are separately reportable. And that's really the process that we're going through now. And if you don't have the right number of separately reportable segments, then you might have to go through these tests a few times to come up with a few segments that are separately reportable. So basically, if your assets are 10% or more of total assets of all the operating segments, not other segments, then again you meet the test and it's separately reportable. And management can decide which assets belong to which segment, because obviously that's how they run their business. So here's an example. Combined assets of all operating segments are $1,276. The amount including consolidated assets is $1,166, and there's a $110,000 asset due to unrealized intercompany profit, which, if you remember that from Chapter 7, and $100,000 in intersegment notes, because one is a receivable, the other is payable. And these would be eliminated in the consolidation process. For purposes of our test, they're included. This is before you do your eliminations. So you can see here we have total of $1,276 in asset, and we're including those intercompany assets into this computation. That's an important thing to note here. It's not just 10% of assets, 10% of assets including these intercompany amounts. So you can see here we get our percentages, and we have separately reportable as food products, plastic and packaging, and health and scientific. Consumer, commercial, and chemicals are still not separately reportable, although I think they were reportable. No, they weren't in our calculation for profit, because each one is more than 10%. And then, so there's three tests of 10%. There's revenue, profits, which has this little twist in it where you have to add the profit and the losses separately and use the one which is larger. And then 10% of assets. So the 75% rule now is going to be a comprehensive overview test. This is going to be the fourth test. And you basically do your revenue, your profit loss test, and your asset test of 10%, and then you apply your 75% of consolidated revenue test. And the issue here is that you might have a lot of little segments, and a lot of them don't meet any of the 10% tests. So if any segment meets any of the 10% tests, then it's considered to be a reportable segment. But then if you add them all up, and they don't add up to 75%, then you have to go back and do some work. So what's going to happen here is that, again, you do the three tests, and if any of the three segments meet any of these three tests, it's considered to be reportable. Then you add them all up, and you add up their external revenue, and you compare them to consolidated revenue. And if it's more than 75%, you're good. Those are your reportable segments, and then everything else is going to be lumped into other. But if it's less than 75%, then you need to think about how to change things around so you get it over 75%. So you might want to combine some segments. You might want to rearrange how the segments are organized, or do something so that you can get these segments up and above 75%. So that requires a meaningful amount of work, and it may mean using some judgment in determining what a segment is. It might mean that you have to take a segment that doesn't meet any of the 10% tests and put it in there anyway, because it's going to push you over 75%. But what the FASB doesn't want is it doesn't want a huge other category that makes up like 50 or 60% of your revenue. So this is a complicated process that requires a lot of judgment. And the FASB says it's looking for about 10 segments as a max. It really wants 6. But 10 is the max, and if you have more than 10, then you might want to think about combining some of those also. So as I said before, exercising judgment here is very important. And let's say you have a segment that was reported in prior years that met the tests, but this year for some reason it doesn't meet any of the tests. Does that mean you have to drop it? No. If it met it in previous years and you expect that it's going to meet the test in future years, but it just missed this year, then that's still good and you can go with it. It's still a reportable segment. Let's say you have a segment that wasn't reportable last year. It's probably not going to be reportable next year, but because of some weird thing, it's reportable this year. In that case, you don't necessarily have to report it separately. But if you change your segments around, let's say all of a sudden there's a new segment in town and it's reportable, then you would want to provide, I shouldn't say new segment in town. Let's say that a segment that previously wasn't reportable is reportable now because it's growing, and you're expecting that it's going to be reportable in the future, and you want to make it reportable. So you include it as one of your segments in the financial statements. If you're going to do that, then you need to provide comparable information for prior years. So if you're providing 3-year segment information, then you need to include information about that segment for the past 2 years, even though you didn't provide it last year or the year before. And you really need to know what you need to provide for each segment. This is very, very important. General information, what does each segment do? Amounts for each separately reportable segment, and I'll tell you what those amounts are, including measures of segment profit or loss, segment assets, and a reconciliation to consolidated totals. So this is more like the minimum, and the SEC requires even more information. We'll be talking about that. So revenue to you have these 3 segments, and then you have other. So revenue to unaffiliated customers, inter-segment revenue, interest revenue, depreciation, segment profit and loss, segment assets, and segment expenditures. And most companies provide more information because that's what the SEC requires. This reconciliation here is very important. You need to reconcile revenues to reportable segments to consolidated revenues. You need to reconcile segment profit and loss to consolidated income before taxes, and you need to reconcile reportable segment assets to consolidated assets. So all of these things are required disclosures under GAAP.